Welcome to Investment Guidance, where I will teach you how to make your money work for you. I'm Rudy Banerjee. Here is a brief overview of myself. I grew up in India and came to the US to do my college education. I did my undergraduate degree in finance at Stern School of Business, NYU, and MBA at Georgia Tech. Over my career of 15 plus years, I've worked in various reputable financial companies like Goldman Sachs, Soros Fund Management, Barclays Capital, and Invesco in trading, research, and operations. Recently, I was at Nicoya Research, an investment newsletter where I was writing about technology, precious metals, and other sectors and made many profitable picks. One of my picks was Sandridge Energy, that was up 400% since my recommendation. I have written various articles on the public and private markets, some of which are mentioned below. Today, I'm starting a new segment on stock picks. Here is the list of topics we will discuss today. Number one, the stock pick name. Number two, why I like it. Number three, analysis. And number four, my rating and target price. My number one stock pick is PayPal, symbol PYPL. PayPal is an online payment system that allows people and businesses to send and receive money and make online purchases. Additionally, they offer credit options, including a digital credit line and a credit card that offers cash back. Its market cap is 70 billion, so it's a large cap stock. Please note that market capitalization is a way to value a company by multiplying its stock price by the number of outstanding shares. A large cap stock is a share of a company with a market capitalization of $10 billion or more. Mid caps is $2 billion to $10 billion, and small cap is $300 million to $2 billion. Here are a few reasons why I like the stock. Number one, stock is currently undervalued at $70, having hit an all-time high of $308 on July 2021. Number two, impressive institutional ownership. Number three, great earnings outlook. And number four, its stock buyback program. It is possible for the stock to double in the next 2 to 3 years. If you want to find out more details, please watch till the end of this video. Before we discuss the reasons why I believe the stock will rise in the future, let's discuss why the stock fell so much. Number one, increased competition. PayPal's branded businesses, led by Venmo, face increased competitions from companies like Apple and Shopify. Number two, slower growth since the pandemic. The COVID 19 pandemic driven shift to online shopping and digital transactions led to record payment volumes for PayPal in 2021. However, as restrictions eased, consumer shopping patterns shifted, with more people returning to brick and mortar stores. Number three, change in management. In September 2023, Alex Grist from Intuit replaced longtime CEO Dan Schulman. A change in management increased uncertainties for the company's outlook. Here are a couple of reasons why he stepped down. Number one, activist investor Elliott Management increased its stake in PayPal in the summer of 2022 and put pressure on management. Number two, slump in their stock price. PayPal is a turnaround story, one that has been struggling but is now trying to improve and may be ready for growth. Let's take a look at the 5 year chart of PayPal. The stock hit a high of $308 in July 2021 before slumping to a low of $49 in October 2023. Currently, the stock is undervalued, and I feel that this was an overreaction to the downside. One of the important criteria for evaluating stocks that I look at is stock ownership by well known institutions. There are two benefits of strong institutional ownership. Number one, favorable outlook for the stock, and number two, stability. The top three holders of PayPal are Vanguard, BlackRock, and State Street. The company is turning things around and its earnings and outlook has improved. In its latest earnings report in July 2024, they reported net revenue of $7.9 billion, which was above the analyst estimates of $7.8 billion. The company beat their earnings estimate of 99 cents by 20 cents. The company also gave an optimistic outlook for its future earnings, stating that they will outperform its previous estimate of $3.83 by 5 to 10 cents. This means they are expecting the growth to continue. The CEO, Alex Chris, on the conference call mentioned that the company had a strong quarter and was confident that they are on the right track. They delivered their best transaction margin dollar growth since 2021 and made great progress on their strategic transformation while investing in innovation and operating more efficiently. This is great news and reflects that the turnaround is in full effect. Additionally, this means that the stock price may rally in the upcoming months to reflect this optimism and strong results. Here are some other reasons why I'm optimistic about PayPal. Number one, its stock buyback plan. In July 2024, during its earnings report, the company said that they now expect to buy back $6 billion of shares in 2024, up from its prior guidance of at least $5 billion. A stock buyback is when a public company uses shares to buy shares of its own stock on the open market. When a company buys back its own stock, it's reducing the number of shares outstanding and increasing the value of the remaining shares, which can be a good thing for shareholders. Number two, its price to earnings ratio or PE, which is 17 versus Block, symbol SQ, which is their direct competitor, which has a PE of 59. Thus, PayPal is much more undervalued relative to Block. Technically, the stock reflects this turnaround. Having bottomed in October 2023 at around $49, the stock has started to move higher in speculation of this turnaround and is currently trading at $70. I think the momentum can continue. The support line is around $55 to $60, an area which it has bounced from in the past and is the level that should hold on the downside if the stock does fall. Here is a brief overview of my rating system. Strong buy, which is buy at current market price. Buy is buy below a certain mentioned price and in 3 to 4 tranches. Hold, which is do not buy or sell. And sell, which is sell all or partial as specified. Here are some risks to consider. Number one, market correction or recession. Recession is a period of time when the economy slows down, and in these scenarios, the stock market declines. In a regular market correction, stocks fall as well. Number two, black swan event. It is an unexpected event that the stock market has not accounted for and often has severe consequences. An example of a black swan event is the COVID-19 pandemic. Number three, PayPal does not deliver on its earnings outlook, which may cause its stock to fall. Based on my analysis, I'm assigning a buy rating, which is based on number one, its improved fundamentals and guidance. Number two, its stock buyback program. Number three, technical bounce back to at least 50% of its all time high. Number four, strategic partnership with Shopify Payments in September 2024. As part of the new deal, PayPal will handle certain online credit and debit card transactions for Shopify payments in the country through its PayPal Complete Payment solution. This is great for the company. This relates to my target price of $150, which is 2 times its current price. It is suggested that one buy in tranches of one-third each below $72. The time frame for the target price is 2 to 3 years. Please read this disclaimer as I'm not a financial advisor and the stock picks are suggestions to consider. Thanks for joining me today. If you have questions, please leave them in the comment section below. Also, please consider subscribing to this channel.